All right, welcome everyone. Let's throw up the chat there so you can drop a comment in the chat as you come in. I see some people are already commenting. Hope everyone's having a great week so far. It's a great week to close some loans, and I really do mean that. So I hope everybody's out there taking advantage of it. We'll wait just a few minutes to get started here, like always. Give everybody a chance to jump on. Let us get live on all the different platforms, and then we will get to it. All right. Hello, everybody. Dropping comments there. Got a great training tonight. Definitely excited for it. So just one more minute here. Happy Wednesday there in the chat. All right. Shout out to everybody checking in. All right. Okay, I think we can go ahead and get it started. We are live on all the different platforms. Let's go ahead and take that chat off there and we will get started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. Now, tonight we're going to be discussing adding value as a loan consultant, which goes right hand in hand with non-QM because we have so many different options that is one of the ways that we add value, right? By analyzing the situation. So this is one of Jose's, Jose's favorite topic. 27 years as a loan officer and a realtor. He definitely knows about adding value as a consultant. When Nick and I first met him, that's been his thing, right? Always since we met you, is add value to the transaction. Even when we only knew you on the real estate side, it's all about adding value to the transaction. So with that being said, Jose, let's take it away.
All right. Good evening, everybody. Thank you for joining us tonight for our sales training with the Mortgage Calculator. Today's topic, definitely with 27 years experience in the business, definitely one that I have been practicing, what I preach on this one. Super important. Especially in the day and age now of all of these technology advances, chat GPT, and all these other things going on, we all have to wonder, what is the future for loan officers, right? I mean, will technology eventually replace us, right? What's going to happen? That is what adding value as a loan consultant really is all about, maintaining your relevance and enjoying a sustainable career long term as a loan officer. So with 27 years experience, I think I have a little context to speak about this situation and maintaining your relevance and sustainability as a loan consultant and not a loan officer, because I like being a consultant. So, besides worrying about chat GPT and what kind of competition that's going to do to us, right there you see there's roughly 340,170 licensed loan officers in the United States, right? That's quite a lot of people. So, some of you may be worrying, heck, then what am I going to do? Especially those of you that may just be starting out, right? I mean, well, some of the things that we have to consider when figuring out our action plan is the fact that rates really do not vary much from uh, does vary would be margin that the office has, and that is going to be determined by the plan and all those other things. Right? So keep that in mind, obviously, when you're considering rates. There is not much variation as you go across the spectrum of companies in the rates. When you're comparing conventional to conventional, non-QM to non-QM, they're all going to be in a very similar range, right? And again, when we're talking about chat GPT and technology, they don't have the human touch. Only a human being has the real human touch, and interaction is a very important component when you're trying to build trust, because in the end, we are talking about the usually largest financial transaction that an individual is going to conduct in their whole life. The purchase of the home, the financing of the home. So what steps should you follow, whether you be a newer or new MLO to the business, or somebody with 27 years experience that needs to retool the shop? You may be thinking, what have I done? What could I do differently to get more referrals, to get more business, to get easier business? Because it's one thing when you're working new business, where you're trying to capture all that new business, whether it's, leads that you're working, um, or if it's a referral business, referral from a past client, or a referral which is a past client themselves doing the deal with you, or somebody that they could have referred to you. Well, we got some answers for you here. The first thing you should consider is trust, right? Real important. We're just talking about trust, but trust is something which technology cannot substitute, right? There's the human compassion, your expertise, just everything that when you're connecting the dots. I mean, most people can read about a product. They're going to read the definitions about that product, but you know what does that mean to them? They're just reading words. They may not totally understand what that needs. They may not fit into that cookie cutter loan, right? It may not be an agency loan. It may be one of the outside the box products that we do, right? So when we're sizing up that situation, when we're building trust, and this goes in line with the training we had the other day about mastering the sales call. We have to always learn how to listen, have a good open communication. That's why we're talking about the human touch, because there's only so much you're going to be able to do with texts and emails. At some point in time, you're going to have to make that call. You're going to have to make the connection. Yeah, I understand. Some people don't want to ever talk. Some people only want to do text and emails, and that's fine. You have to adapt to all those scenarios. But don't assume that nobody wants to talk, that nobody wants to, and that all they want is text and emails, because then you're going to be missing out on that direct communication, and you're going to be missing out on establishing the trust that that individual may need to basically push them over the top to be able to make a decision and to choose to work with you. you know so what are some other things that help establish trust? Well, you can start by answering the phone, right? How many of us forget that, how important that may be? Answer the phone when it rings, return your voicemails, emails, and texts promptly. I mean, yeah, 24 hours is a good rule of thumb, but I really think if you're trying to wow them, gain trust, and be their trusted advisor, you should really do better than 24 hours. It should be like as soon as possible I mean, that will get it for you 9 times out of 10. That will be a lot more important than another tenth of a percent in the rate if you're competing with someone. If you're the one that's always answering the calls quickly, returning the messages, the calls, the texts, the emails quickly, that's going to leave a very solid impression on that individual uh, borrower, to the point that that is going to be a lot more important for them, and possibly and probably will be more important than that tenth of a percent maybe that you're competing with one of the online shops that's like a loan mill. They got 10 million people working the loan. Nobody knows who the loan officer is. There's nobody that the borrower can really build a relationship with. But you're there answering the phone, answering the emails, answering the texts, being attentive to the needs. You're going to be seen as that trusted advisor. So again, really important to build trust. And if I could lay a little bit of context here, the whole purpose of adding value as a loan consultant is, in the end, you heard the phrase "the buck stops here." Well, that's where you want it to stop. You want it to stop with you. You want their searching around all over the place, interviewing 10 million MLOs to stop once they reach you and they see how different you are from everybody else. I should have put that context in there a little bit before I started getting into trust and building trust, because that's really what it's all about. You want them to stop, you want them to commit to working with you, and you don't want them to be shopping you around and basically just trying to nickel and dime you to death on the deal. There should be more value to the transaction than simply what their monthly payment is going to be. Because, like I was saying, in the end, most interest rates are going to be the same. Most monthly payments are going to be the same or very similar. And the amount that they do change is not going to be so great that you may not be able to overcome that by just your service and the trust that they build in you. So that's, to me, in 27 years doing this is what I like to employ the most. I like to employ all of the techniques that I'm going to be showing here to you, so that at the end they are just basically tripping over their feet to commit to work with me, because in this very competitive environment where they need that real experienced, capable professional assisting them to navigate these very tough waters of multiple offers, and do I qualify, do I not qualify, can I close quickly? It all boils down to them trusting you, being able to do that for them so that you get the deal. So remember, you are not a quote bot. If you act like a quote bot, you'll be treated like a quote bot. And quote bots are not given the time of day. There's no value there. It's a machine. It doesn't have a heart. So if you want them to, have compassion for you, you got to have compassion for them. So once you build that trust, you need to be a problem solver, right? That's real important. That's an intertwining thread. When Carl mentioned how we are pride ourselves to be loan consultants, and we pride ourselves to train our MLOs to be loan consultants. It's really important. It all goes hand in hand with all of these steps, and you want to be that problem solver, because the experience has to be pleasant. In the end, that's what they're going to remember. That's what's going to get you referrals. That's what's going to keep the deal together. That's what's going to cause them not to cancel the deal on you, right? They're sensing that you have it together, right? From application to processing to submittal to closing, a nice stress-free experience, no surprises. And if anything does come up through your communication, through the trust that you've built in them, the expectations that you have set already, plan A, plan B, plan C, you got to let them know this is the main objective. If it doesn't work out, this will be plan B. And if it doesn't work out, this will be plan C. In most cases, in your cookie cutter loan, it's not an issue, right? That's fine. You don't usually have to worry about it. But in some of the more extreme loans where there could be some judgment calls on if something is going to go our way or not, we have to make that path clear to the borrower so that then we can set the proper expectations and then put our solutions up there. Identify the issues, provide the solutions. Don't just be like a negative person and not give them any hope. We have to identify the issues and then provide all the solutions that could be possible for all of the issues that we may show to them, right? So again, at this point, you can't assume we're talking about cookie cutter because we know that usually that's not the case. Each mortgage is an individual experience with individual circumstances. No two mortgages are going to be the same usually, even if they're both exact, same dollar amount. It's going to be different. So very important, and one of the things that we stress a lot is training, education. I mean, that makes up a lot for the experience that you may lack. I mean, in myself, having been all the years I've been in the business, I'm always trying to keep up with my training. I'm always learning new things every day. I mean, that's the only way you can stay ahead of this game, is to always be learning, and so that then you're always seen as an expert. This all goes hand in hand. Trust, expertise. This is how you get the loans. And again, at the mortgage calculator, we're always about our outside the box options as well. When we're talking about, don't assume what they need. Again, think outside the box in the solutions that we can provide. Maybe there's a different way to look at it. Maybe it could be I mean, a number of things. If we're talking about loan to value issues, if we're talking about credit issues, maybe getting another borrower, maybe structuring the property a different way. Maybe we didn't need to do that DSCR loan. Maybe we could do it as a bank statement loan. I mean, for whatever the scenario is, don't just limit yourself to only looking at the problem one way, because you're going to limit yourself on the number of solutions. Now, luckily, at the mortgage calculator, we have hundreds of programs. We do not lack solutions. All that is needed is a proper assessment of what the problem is so that we can solve it. So that takes us now to, you've built the trust, you've identified the issues. Now it comes a real important part where now you're going to be tying in these loose ends, connecting the dots, right? Dotting the I's, crossing the T's, because you need to convey to your borrower clearly what their situation is. I like to call that empowering the borrower. When you empower the borrower, you make it that much easier for you to proceed with your loan. Because if they clearly know everything that is involved in their case, the ifs, the ands, the whys, the what ifs, all that can happen, then I mean, everything's out in the open. We're talking about transparency here. Even if it's bad news, it doesn't matter. It's not bad news. It's you're just explaining the situation to them in a clear manner. Sometimes what you're explaining may be difficult for them to accept, but the whole idea is to also provide the solutions. Hopefully, most of the time, they all have solutions, right? What so when you do educate your borrower, right, with all of this knowledge, then I mean, again, right there, you're adding the value. They're going to be able to make a quicker decision. If they understand clearly why they need that DSCR 0.75 to 0.99 option, then they're going to understand why the rate is a little bit higher and the cost is a little bit higher. I mean, they're going to appreciate what you're doing more. And what do you think is going to happen there in the end result? The end goal here isn't really just to close the loan that you're closing today with the borrower. The end objective here is referrals, more referrals in the future, referrals to do this borrower's future deals, referrals to do the borrower's son's deals, and if you're staying in a long time, referrals to do the grandson's deals as well. I mean, I actually got a few grandkids that I'm doing here. So I mean, and when you're talking about with investors, now you're talking about referrals on steroids, because if you build trust with an investor, if they see you as the person, the go-to person, all of a sudden you're talking to them about that property. uh you know Light bulb went up in their mind as you're talking to them about how sharp, and they're seeing how sharp you are. All of a sudden they tell you, well, now that you mention it, I do have seven other properties that maybe you can do them for me too. Here, let me give you some addresses. Next thing you know, you're putting together a six pack, and I'm not talking about a six pack of beers. I'm talking about a six pack of loans in one shot, right? From one investor, simply because you put yourself forth as somebody that really cares, as a consultant. I mean, and that to investors is very important, because investors are trying to usually are on a mission to put together a team, right? And if you can be the finance person of that team, then you're in, because next thing you know, you're in on the investment club as well that they're a member of. And now you have all the investors from the investment club wanting to find out about that cool DSCR program that you're offering, that seems like nobody in their neck of the woods is offering. So again, I mean, much more important than rate, because I mean, we sometimes get tunnel vision about rate, and rate is important, and we have very good rates at the mortgage calculator. But just as important, probably more important, is everything else, because like I mentioned before, everybody has the same rates. We all have access to the money. It's what we do with it that matters. Oh, sorry about that. So, very important here, tying in all of these approaches, is technology. Because I'm not going to say that technology is bad. I mean, mind you, I'm from the pre-LOS generation when I started. I mean, we did loan applications by hand. I will go to the processor's office to pick up the package, to go then meet with the borrower at their house or at the office, or wherever, and sign like 150 pages, stuff like that, and then go back to the processors, turn in the whole big package. We just killed two trees. So definitely, I can tell you that all the technological advancements that have occurred have definitely allowed my productivity to increase, made the job easier in some ways, and obviously more difficult in other ways when there's a breakdown in the technology. But overall, it's a very positive experience, because technology allows us, and this is real important for you to be aware of, to be more human, because it allows you to do more of the human touch things, because you're getting the basic mundane processes as so that then you can do what you have to do as a human being, and have a career. Technology products are usually important. Obviously, CRM, that's a contact management, right? The CRM really good. We all use the CRM for the leads and all that. But above and beyond that, and we're talking about at the mortgage calculator, our quoting system, right? So I can definitely tell you, sending out quotes with our quoting system, which has a human touch to it, is leaps and bounds above the caveman way of doing it, which was sending out an email and with just a bunch of words, black and white, no color, no buttons, no nothing. So the quoting system is one of our proprietary technology pieces that I can tell you I don't know how I ever did without it now that I have it. So you definitely, it sounds almost like it's contradictory to itself, but employing technology will allow you to the opportunity to have more of the human touch on your borrower if you choose to do so, because you could easily get caught in just using technology and not having the human touch, and then you could lose the opportunity to really convey that consultant mindset to your borrowers. So what I'm trying to stress here is, yes, technology is great. It should speed up the transaction, which is one of the reasons borrowers like consultants as well. They don't want their transaction to take forever, but don't just get so caught up in technology that you don't follow up as a human being, because then in the end you may be nothing more than a quote bot. And most importantly, in the end, tying everything in together, be an advocate for your borrower, right? I mean, this ties everything in together, right? The human touch, the expertise, technology, compassion, you know, keeping in mind they need that concierge service, basically, getting them by the hand and walking them through the whole transaction. But it has to come sincerely. I mean, they are going to be able to tell. I mean, at this point, if you're this far into the transaction, they already trust you, right? So you just have to continue that experience through the closing and then post closing, so that you can continue to receive referrals. Because if you just close them one time, you're totally missing out. So you definitely have to keep the communication channels open with them. Don't just forget that they exist. Share the excitement with them, you know while at this, and since you've already built up the trust, we already can say that you have been able to look out for their best interests and their financial security in a manner that made them feel comfortable, so that they use you. Because I mean, there's a million people out there, again, 340 something thousand loan officers, all saying how their rates are the lowest and how they're the best. And it's just a lot of empty words. But it's actions, as they say, actions speak louder than words. So just make sure that you and your team, and by team we're talking about the people within the company that you work with, as well as the teammates that you have, like the accountant, the attorney, the realtor, maybe the contractor, architect, and depending how big you build your team out, that everyone is on the same page regarding how they feel about the customer, so that you can create a lot of synergy and get a lot of referrals. Because I'm telling you, if you expect to do it 27 years like I've been doing it, at some point you want the easy business. You don't want to just get burned out always having to close the deal on every single one. At some point you want them to come and say, yeah, man, great, I'm here again because you did such a good job on the last one. They trust you so much, they just hand it over to you, and then you just got to keep connecting the dots. So we're really looking forward to helping the team with all of these loan consultant experiences, because at the Mortgage Calculator, that is what we are about. We're all about adding value to the transaction.
Beautiful. Great presentation there, Jose. Nick, were you going to say something? Okay. All right, perfect. Well, I won't take up any more of anybody's time because that was perfect. Perfect timing, too. So remember, we do these every week, 7 p.m. Eastern time. On Wednesdays, we do our sales trainings. And then also keep in mind that 11 a.m. Eastern time every weekday morning, we do our daily mortgage rates live, where we go through the different rates and then we do a deep dive into a different topic. But I love these trainings, sales trainings, my favorite trainings. Go ahead and check us out 7 p.m. Eastern time every Wednesday. Thank you, everyone, for tuning in. We appreciate it, and we will see you next week or see you tomorrow at 11 a.m. Eastern. Take care, everyone.
Thank you, everybody.
Thanks, everybody.